Hello traders, Gary Wagner here, just about 10:20 in Honolulu, 4:20 in New York. It is Monday, 22nd day of May 2017, and this is the Daily Report for Gold and Silver. We have a nice continuation of the rally, which began in essence about 2 weeks ago, now taking both gold and silver pricing to new highs that we haven't seen over the last 3 to 4 weeks. We're currently trading up about $7 in gold, this being June's futures contract at $12.6060. It is traded to a low of $51.60 and a high of $62.60. So as you can see, we are less than $2 off the high on the day and trading up about 0.5%. We sent out a trade alert yesterday recommending the rollover of positions in our June long gold contract. Of course, I will explain that in detail once we pull up our technical studies. Over to silver. Silver showing a phenomenal gain in excess of 2% on the day, trading over $17 right now at $17.15. It is traded to a low today of $16.84. and a high of $17.21. So traders, absolutely no doubt we have substantial gains in both gold and silver. We did send out a special trade alert recommending that traders that are trading futures contracts, and this only applies to futures contract, if you are trading Forex spot, physical, GLD, or anything involved in the cash market, you can disregard the message that I'm about to convey. But for those that are trading futures contracts, we were trading, or are trading, I should say, our June contract, which is the most active contract, trading currently at $12.6030, putting it up about $6.70 on the day. However, those will go into expiration shortly. And unless you're planning on taking delivery, which I don't believe is the case with any of our subscribers, you are going to want to roll that over. Now, in essence, a rollover is selling the position that you have and buying a position further out in terms of time. So in essence, when you do this, you will be pulling profits on your current trade. So for example, if you were to get out right now, you got in at $12.25, you got out at $12.60, the differential is the profit. You would then enter at the same time, you're going to buy and sell simultaneously this Q7, and Q7, simply put, is the August contract of gold. It will become most active. And as we look at our charts with studies on them, of course, as August goes into most active, we will begin to look at that pricing. However, we will continue to use most active contract for our major studies up until the point or through the point when August becomes the most active contract. So therefore, traders, go ahead and sell your current position, your June position of gold. By the August, it is a rollover, but you will be pulling profits on this trade. Now, let's take a look at gold. So traders, we are looking at a daily chart standard candlestick format in gold. And we do have, first of all, our various moving averages, our 200-day, as well as our 50-day. We talked about the fact that on Friday of last week, we had them cross. You can absolutely see that on today's action with the shorter-term 50-day moving average now trading slightly above the longer-term 200-day moving average. You can see it right here, 1250.5. That is the shorter-term 50-day moving average, and the longer-term 200-day is at 1249. That certainly bodes well for a continuation of this bullish rally, but more than that, it signals the real potential for an extended rally as this market moves to higher ground. So, at what price points are we currently looking at? Well, consider this. When we look at our fib retracement, our basic fib retracement, the 23% retracement, comes in roughly at 1256. And this most recent high here comes in roughly at about 1265. So we're just shy of that price point. When we consider today's high at 6280, we really tackled that but did not take this particular price point out. So first, I want to see this former high get taken out. And that being the case, or if that comes to pass, the next real target that I'm going to have is 1280. 1278.70, and then these tops sitting up here at 1297, which is the record top that we hit this year. That's the mark that I believe that we can take out. And so traders, if you recall, when we sent out the trade alert yesterday, we spoke about converting or rolling over your gold position. In terms of silver, silver should have already been rolled over, and most active right now is the July contract of silver, trading at 1714.5. You can see 1714.5 here, and that is the contract month you should be in, and you will continue to be in. Now, interestingly enough, when we look at silver, silver has had the greatest gain when we compare it to gold in terms of a percentage gain. We have seen the gold-silver ratio narrow because of that, and we have seen exceptional upside movement in silver, especially today with silver closing up roughly 2% on the day. Now, considering the move that we recently saw, you can see whereas we saw a three-river morning star in gold, in silver we had a very, very similar market pattern show up, but it was more a what I called a bullish harami, and that's only because the star did not appear below the low of that red candle that's right here, and rather was on the inside of it, but really near the bottom of it. So you could say that these three candles here formed either a three-river morning star variation, that would be one way to describe that, or a bullish harami and a confirming candle, which I believe is what we called it, which is a more precise way of labeling the particular pattern group that we see in the weekly. The fact that both the weekly gold and the weekly silver have similar patterns, the fact that they have both broken out to the upside and formed some real support, and the fact that we have both our 200-day and our 50-day moving average in a golden cross scenario in both gold and silver tells me that the market move we are currently looking at will be an extended move that will not be of a short-term nature. Therefore, my recommendation in silver is to maintain your current long as well as your current stop. In other markets that we follow, a dollar index currently under pressure, down almost 0.2%, trading at 96.87. However, when we account for recent daily gains today in gold and silver, with gold being up 0.5%, silver being up over 2%, we can see that this rally, at least today, is not all dollar based, with the weak dollar only accounting for a portion of the net gains that we have seen on the day. U.S. equities are faring pretty well today, with the Dow Jones Industrial Average closing up almost 90 points on the day, 0.4% gain at 20,894. NASDAQ Composite also trading higher, gaining almost a full percentage point, gaining almost 50 points at 61.33. And then lastly, a Standard & Poor's gaining about 0.5%, closing at 23.94. So traders, as we noted in our opening letter today, recent pressure in the US dollar has absolutely been supportive of gold. But we also talked about the fact that, for example, today's action in the dollar has only taken the dollar down about 0.2%. At the same time, gold has risen 0.5%, and silver 2%, which tells us that it is not only a weak U.S. dollar that is providing upside momentum to the precious metals. There's also some serious buying in there. But one thing that I do want to point out, and when we look at the dollar index through a standard candlestick chart, and this is a daily chart with our 200-day and 50-day moving average, what we are seeing is the potential for the opposite of what we have seen in both gold and silver, which is a golden cross. Again, a golden cross is simply a time in which the shorter term, the 50-day moving average, such as right here, crosses above the 200-day moving average, which is right here, and you get your golden cross. So we definitely got a golden cross back in September of last year in the dollar index. Well, look at the markets right now. You've got the 50-day moving average converging or moving closer and closer to the longer-term 200-day moving average, and it does appear as though there is a strong potential to have the shorter-term 50-day moving average cross under the 200-day, and that is called a dead cross. And a dead cross, of course, is signaling the potential for lower prices in a long-term manner because we are looking at a large data set, the data set here being a 200-day data set comparing it to a 50-day data set. And so if it does cross, it is certainly on a technical basis a very bearish signal for the US dollar. So traders, although we are only sitting at the beginning of the week, but we do have a update. We're trading $6 higher in gold. We're trading 2% higher in silver. We are looking at our weekly chart in gold, and we can certainly see the potential for a continuation of the Three River Morningstar that we identified at the end of last week. Therefore, assuming that you have rolled over your position into August, you have pulled profits on your first part of your trade, your June trade, and now you are long your August position. Maintain that current long, maintain your current stop. July, silver is the contract month that you should be in for your silver trade. Maintain your current long silver position as well as your current stop. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.